Hey everyone, this is Mulham. TGIF is a new setup by ICT that serves as a reversal pattern that happens almost every Friday and can be traded in all different assets. There are people who only trade this setup every Friday with different pairs and successfully making a living off this setup. This video is a full guide for this setup or strategy. I'll cover everything you need. Make sure to leave a like, subscribe to the channel, and join my free Discord link in the description. Let's get into it. Now, before going in details on TGIF, we really need to understand something, and that's the main element of TGIF itself. It is power of 3, also known as AMD, and open high low close and open low high close, and weekly profiles. So when it comes to even any candle, most of the time, what's gonna happen, and we're gonna focus on the weekly profile, the weekly candle. Most of the time, the week start this way. Start by opening here, then either going up or down. On this scenario, on the open low high close, what happened is price open here. Whenever the candle opens, it will start to go down or up as a manipulation. So we have our manipulation here. And then what happened after is price expand to the upside. So if price open low, then most likely it will expand to go up. And before closing, price will make the high and then go down to close. Now, if we analyze the candle, how the candle will be, it would be this way. It would be a bullish candle. What happened is price opened here, go for a manipulation here. So this week is your manipulation, and price expand to the upside, went all the way here, and then price went down for retracement and close here. The same thing happened here on open high low close. So price opened here, went up for a manipulation, and they started to go down. So this is your manipulation here. Price expand to the downside, and then before closing, price retraces and close here. And this would be the weekly candle. It would look like this. Now, what happened is price opened here, went for a manipulation on the upside, started to go down, and then closed here. Retraces to close here. So most likely what's going to happen when you have a candle, price will not close this way. Especially, on the higher time frame. I'm not talking about the lower time frame. If it's a 1 minute candle, then it can close this way. Why? Because it's only 1 minute candle, and let's say price was going up. But on a weekly, especially on a weekly or a daily, price will not close this way, most likely. After making the high, it will retrace down. And the same thing here. So what we are focusing on is this retracement before closing. This is what we are trading. And I'll go on details on this right here. You see, before closing down, we are really looking for this movement. We're really looking to go long here and short here. And this is against the order flow totally, but it's a nice opportunity and almost guaranteed. Price will most likely retraces before closing a weekly candle. Thank God it's Friday, and it's a setup by ICT himself. What we are looking for is basically on the weekly candle. Now, if we look at any weekly candle, we have the weekly time frame here. If we go to any weekly candle, like, you can go and backtest it yourself, and you will notice it exactly the same. Now, if we go to any candle, what we can see is, for example, this candle. What happened is price opened here. Here was your manipulation. That's your manipulation here, right here. Price expand to the upside. So basically for the week, your order flow would be to go bullish, right? But then price did not close here. It did not close here. It retraces and close here. Most likely, this retracement here, most likely it happened on Friday. Same thing here. Price opened here, went for a manipulation on the downside, started to go up, and it had a high at this point, and then started to go down. Most likely this retracement happened on Friday. So that's the logic. We're looking for a retracement, and sometimes it can get up to 50% of the range. So let's say your range from Monday to Thursday is, for example, 500 pips. The retracement on Friday can get up to 200 points or 250, but it's not always, a lot of time. But you can see here, for example, it can happen here. It's right here. So basically, we're looking for those retracement, and we're going against the order flow. Now, if I go and zoom in any candle, weekly candles, for example, this one, we have open here, and then a low, close here, and a high here. Now, if you go to the daily, if I'm like, let's say this is from Monday, okay? If I go to the daily, you would see that this is Monday, and this is your manipulation here. Monday opened here, went down, and created this low here. So that's your manipulation on Monday. This is your manipulation on Monday. You see how price went all the way down. Now price expand to the upside. Monday, Tuesday, Wednesday, Thursday. You see the expansion here? It expand to the upside. There was a small retracement on Thursday, but there are more retracement and a deeper retracement on Friday right here. That's what we are looking for. We are looking inside Friday and looking for a short position. Now, when price is reaching, let's say on Thursday, or even in the weekly, if we go to the weekly, we can see that price is reaching this order block here, right? So when price is reaching a high time frame period array, that's where we can find a quality setup. So we really want price reaching a higher time frame period array, either on the weekly, on the daily, but we want price to reach that higher time frame period array on late Thursday or Friday. And then we can look for a setup from there. Now, ICT also uses the 20% and 30% of the weekly range as a draw on liquidity. So when we see a confirmed high, we can grab our fib from the low to the high or the high to the low, and we can expect price to go to that 20 to 30% as a draw on liquidity. But I will not be using that one that much, okay? Also, when you're looking at your weekly candle, you don't want it to be, let's say, you're already on Friday or almost late Thursday. You don't want your candle to look like this on Friday or Thursday. Why? Because we already can see the retracement happening. It already happened. However, you really want it to look like this. You really want the body of the candle to be close to the high of the candle. Just like this candle right here. This one. Another candle is this one right here. Another example is this candle right here. You want the candle to be just like this on Friday or late Thursday. You want this body of the candle is so close to the high of the candle. You don't want that retracement to be already happening. You really want to get in that retracement. We should also be aware that the high or the low of Friday can be either on London kill zone or New York kill zone for Forex, but for indices, it can be on the AM session or the PM session, sometimes either the Judah swing or the silver bullet time. So when it comes to the steps, what we need to look for is the first step is we want to look for a pair that's been trending for the week. So we really want those big candle going either up or down. Those are the pairs that we're going to trade for the upcoming Friday. That's the first thing. We want to ensure that there was still no retracement before Friday. So we really want to see price going up and the body is close to the high. We can switch to the daily time frame to make sure that this pair is trending. So what we can see is Monday starts here by going down, and then Tuesday, Wednesday, and Thursday all going up, right? From here all the way here. This is the move up, and we can also see that Thursday closed this way. Thursday closed like this. The candle closure is near and close to the high of the candle, and that's what we're looking for. That's what we should look for. So that's a good pair to trade this setup. The second step is to go to the left and look for a period array to the left. We can first look on the weekly, so we can make a quick top-down analysis from the weekly to the daily and the 4-hour. We can see clearly that prices getting inside this fair value gap here and almost touch that fair value gap on the weekly. And on the daily, on the weekly, it includes Friday. So now we know that Friday is approaching this weekly fair value gap. Also, on the daily, we can see the same thing here. Daily fair value gap. So a high probability setup should have a higher time frame period array. That most likely Friday high will reach here and then start to go down. And we can clearly see here that, okay, Friday came to this fair value gap and give a small retracement. Now on the lower time frame, we're looking for this retracement here to enter here and take advantage of this retracement. And now the third step is a very general step because this setup itself, it's kind of a bias, it's kind of a thing that we can apply our setup inside of it. Same as silver bullet, same as Judah swing. What are we doing in Judah swing? We're actually applying our entry type, either a sweep and a fair value gap, or a sweep and a breaker block, or a sweep and a PPR, all of those stuff. We're applying this inside the Judah swing timing or the silver bullet timing. So we can do exactly the same thing here. What we're gonna do is switch to the lower time frame, whatever time frame we are trading in. Let's say, for example, 15 minutes here, and we can see here that price goes to the weekly fair value gap and created a Judah swing here at 8:30. So this is our Judah swing. Now, if you're trading a fair value gap here or a PPR, you can basically enter here, right? And then target, for example, this fair value gap right here or this fair value gap. So you can apply any of the setups that I already talked about. Now you can go to the 15 minutes, to the 5 minutes, to the 1 minute, and you can apply any setup that you already know. Either the 2022 mentorship model, which is a sweep, change of character, and a fair value gap, or you can go and check my other videos and apply any setup in here on this situation here. Now don't worry, I'll go over different examples with different entry types and techniques, but for now don't worry, I'll show you a lot of examples all with different techniques entries. I really suggest implementing the 8:30 Judah swing for Forex and 9:30 for indices, and also for indices you can use the silver bullet timing, also the same for Forex from 10 to 11. Those are times where the high or the low of Friday happens, and that's where the retracement starts from. For example, you have 8:30 here, a sweep, and price went down. This is your Judah swing. Now, if I keep going, you can see that on the 15 minutes, what happened is price reacted from here and then started to go down, even for the next week. You see? So at 8:30 exactly, that's where time and price comes. At 8:30 exactly, what happened is that created the high of Friday and the retracement, and after that price went down all the way down here to take those equal lows. The first example I'll cover is GBP USD, pound dollar. Now we can see clearly that price is approaching a weekly fair value gap, PDR rate right here, and price is also taking this liquidity. And if we switch to the daily, we can see that we also have the same fair value gap right here, a fair value gap. Now, we are on Thursday, and we really like this type of candle here, right? This is the type of candle that we want to see. Now, we're going to wait for Friday to go all the way to this PDR array and then react from there. That's what we're looking at. Now, let's say that on this type of entry, we're going to use the 2022 mentorship model, and I'll use it, let's say, on the 1 minute time frame. Okay, so you would go to the 15 minutes first, and you'll wait for price to go there, and now price is going into that fair value gap, and we can see there was type of a reaction here. But let's say we are on the 1 minute, we can see that okay, price came here, react, and they come fill this fair value gap, started to go up, down, no change of character, nothing. Price fell this fair value gap, so we can say that this is an intermediate term high. There was a sweep here. Now I'll wait for price to come to this point for a change of character, but price gave me another sweep. You know that inside a fair value gap, I really want to see multiple sweeps before entering. Why? Because we are on the 1 minute, and this is a daily or a weekly fair value gap. So it's not the best move, but I'm really demonstrating that. But I'm really just showing the types of setup that you can use. Price started to go down. I'd be looking for a change of character below this level here. And I do see a change of character with kind of a displacement. This is a nice displacement with a change of character right here. So what I would be looking at is this fair value gap that has an order block above and aligning with or overlapping with a breaker block. So this is my area of interest. That's where I'd be looking to sell. I would not be looking for this extreme fair value gap to be filled. Why? Because I do have this breaker here aligning with this fair value gap. So a lot of time, not every time, price will come here, and then we'll react. It's not gonna fill this fair value gap. So what I'm gonna do is I'm gonna set my limit in the middle, or the 50% of this fair value gap, stop loss above this point, and that's only a setup for people who like the 1 minute time frame. Now I think I'll put it here, okay, right here, and I'll target, let's say, if I switch to the 5 minutes just to see the structure better. Now this is 2 to 1. You can target 2 to 1, but I'll be looking, for example, no, I'll target, I'll go 3 to 1 at this fair value gap, 3.4, or let's go 3.5. This is a nice trade, I believe. Now back to the 1 minute. We want price to fill this fair value gap and start to go down. Okay, so now we get filled, even though it went to our take profit and then comes to our entry. Since our take profit was not kind of a liquidity or a major liquidity, then I would still be in the trade. Now I'm in the trade. Why? Because I can clearly see that there is a low resistance liquidity here. From this low up to this low. So that's a very nice liquidity to be taken. So I would take my take profit to this point. That's what I feel. And we're gonna see how it goes. Now I'm gonna, play on the 5 minutes. We can see that there's clearly a nice liquidity. And price immediately go down and take that liquidity. You see? So this is a setup. This is a 4.2 to 1. Now, if you're not used to those high rewards to risk, then you can stick with 2 or 3 to 1. So now taking a look at EU, we already had an example on GU, now it's EU. So if you play the next week, okay, this week, so Monday started here, this is Monday, Tuesday, Wednesday, Thursday. This is Thursday. Now we really like this type of candle because it has a big expansion. So we really know that, okay, price is gonna go down next on Friday. Why? Also because of this order block here. So this order block price is approaching, or actually inside this order block, but we are not going to take a trade until it is Friday, because we are expecting that retracement on Friday, not Thursday. We're going to go to the daily, or actually let's go to the 4-hour, and we're going to wait for London first to open, and then we're going to go to New York, and we're going to see what happened. So now it is Friday and it's 1 a.m. So let me go back here and go to the 15 minutes. So we had a high here and price went down, but this high was on Thursday. So most likely this would be taken. Previous day high. Going back to the 5 minutes here. Let's wait for a sweep of liquidity. Most likely this one. Why? Because of the high of Thursday. And we want another high on Friday to happen. That causes the high, almost the high of the week, and then price retraces back. Now we can see there is a liquidity sweep here. Now we can go and look for a change of character on the 1 minute, but let me apply something else. Let me show you how to apply my trading plan, the full system, into this trade here. So we had a displacement to the downside. Now you can simply enter, on the fair value gap, or a potential fair value gap right here. You can enter on this fair value gap immediately, but what we're gonna wait for is a liquidity to happen where we have a fair value gap above. So this fair value gap was filled and price goes down. This fair value gap was not filled to the 50%. So now this is considered a liquidity, and there is a potential for price to go and take liquidity from here inside this fair value gap and start to go down. That's a potential entry. So we're gonna look for this one, and we're gonna keep an eye. If we don't have a setup on London, we're gonna wait for New York, because most likely it happened on New York. So price give kind of a change of character and goes up, and it's approaching this high, and it take that high now. There is a purge here. Now switching back to the 1 minute, we can clearly see that, okay, this was a liquidity sweep. Now we're gonna wait for a fair value gap without the need of a change of character. Why? Because price did not close above. Price goes down, there was no fair value gap here. And now there is a small fair value gap right here. So you can enter on this fair value gap, have a stop loss slightly above here. Let's say how many pips? This is 2.5. This is too low. 2.5 pips. I would go 3.5. One more pip. And then let's see what to target. So first we have this low hanging fruit here. But this is 1.9, which is kind of low. We can see that we have this fair value gap here. A small fair value gap that is not filled. So maybe we're looking for this fair value gap to be filled. We're going to target the high of the fair value gap, this low actually. And this is 2.7. Okay, this is not bad. This is not bad. Let's start to go down. Okay, so it hits take profit. Another example is this one. So we can clearly see that we can see anything on the weekly. You can see how candles are inside of each other. So it's better to lower the time frame and go to the daily to see better picture. So on the daily time frame, what do we see? We can see that, okay, there was a fair value gap here that was partially filled, but then there was another extreme fair value gap here. Now, I would not be looking for short from here on Friday. I would only be looking for short only if price goes to this fair value gap, or even fill this unfilled part of the fair value gap, taking the high of Thursday and Wednesday here. So those are the only scenarios here. Why? Because my weekly candle has this small retracement here. It's not that major retracement, but I should be aware of that, you know. Only if price goes above, then I would be looking for a retracement to the downside. And let's go to the 4 hour first. And we can see that, okay, it's still Thursday. It is Friday now, so let me go back here. This candle goes to the, take the liquidity here. Still 1 a.m. Now, if you take trades on London, then you can take one here. But if you are focusing on New York or even like Judah Swing or Silver Bullet, then you can wait. What happens is price goes above at 5 a.m., goes inside that fair value gap. You see the fair value gap that we marked. Now switching back to the, let's say 5 minutes, what do we see here? We can see that price took liquidity, goes above inside that fair value gap, and give me this type of candle here, this type of projection, and then started to go down. There was no textbook change of character, but we can literally see the rejection from here and the price coming down. But there is a potential for, break a structure again. So this is not the best setup. Going back to the 1 minute time frame, it's still the same. There was no setup unless you're actually trading of this fair value gap here, the small one here. If you find an entry here, then okay. But overall, even though price got rejected from here, but it is after 11:20, so it's not a good time to enter, even though price went down. And let's see what happened on the future. Price still go down, but this was not a valid setup, even though price respected that fair value gap, but there was no clear opportunity to enter from here. Now, at the end of this video, I could have gone over more examples, but it's going to be a waste of time for you and some confusion because, I'm going over some different entries type. What you need to do is basically just use this time the same way that you're using your Silver Bullet and your Judah Swing. Just making sure you're doing some top-down analysis. That's the first thing. Then after that, just implement your main setup in this day and time frame, and you should have an edge on this day. If you don't have a setup yet, then make sure you watch my other videos as I've introduced a lot of setups and strategies. Make sure to like this video, subscribe to my channel again, and join my Discord. That's it for today. I'll see you in the next video.